Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on June 13th, Friday the 13th. So it was another mostly quiet week with not a lot of movement until last night, of course, when Israel struck Iran, and I think they're still going, and I'm sure Iran will strike back and all that sort of thing. And what's interesting is even before today, where we're seeing some selling, but nothing out of hand, but even before today, we saw some of the high relative performance growth stocks especially start to pull back late last week and earlier this week. Just kind of a sign that some profit taking was starting to set in after some moves for, the leadership that was out there. Not that there's a ton of leadership, but the leadership that was out there. Shorter term, I would say the odds favor, higher volatility going forward, whether that's a, 4% pullback in the major indexes to really shake people out, or just a lot of choppiness and news-driven action. The market has a way of kind of cycling a little bit between, very quiet and tight to a little bit more volatile and uncertain, that sort of thing. Intermediate term, which is my main focus, nothing's really changed. The trend is still up for the market and most stocks, the ones that have pulled back. There's been no real abnormal action. It's just been sort of tedious. They pulled back, but they're just pulling back to, say, 25-day moving averages. Growth versus defense, the broad market, that's all still intact, okay? Obviously, if that changes, we will change, but so far I would say the odds favor probably some more retrenchment or tedious action near term, followed by support and a resumption of the rally, intermediate term. What I'm really going to be watching though is how we pull back and how the individual stocks handle it. As I've said a million times, to me, I know a lot of people get excited. To me, there's not a ton of leadership out there. There's not a lot of stocks hitting new highs. Of those, maybe half or something are institutional quality, growth names. So it's not a lot to work with. So my question is, do the ones that have sort of declared themselves hold up well? And then if and when, hopefully we, get going in this pullback, whether it's 3 days or 3 weeks or 2 days, whatever, when we start to resume on the upside, do we see those stocks also resume, and do we see another batch of fresh breakouts? Let's just take it day to day. Right now, I wouldn't get too far over your skis and be buying every dip. And if you're on margin or something like that, or you bought a bunch of stuff sticking straight up in the air, you got to be careful. But if you've been kind of buying in steps like us, you have a little bit of cash, I wouldn't be freaking out one way or the other. I would just keep some, stops in place on some of your weaker names and see how it goes. In Cabot Growth Investors Model Portfolio, we've been stepping in steadily, but more slowly of late because we really haven't seen that much more progress from the market in individual stocks. So we're still about 28% in cash. And we have maybe 3 or 4 mostly smaller positions that are, okay. They're not doing anything wrong, but they're also just kind of okay. So maybe we'll have to bail out of 1 or 2 or 3 of those if things get hairy. But like I said, we'll just take it day to day from here. Right now, near term, cautious, like everyone else, seeing what happens. Intermediate term, though, still bullish. Okay, that was a long preamble, so let's hop into the charts. As usual, I'm using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. We start, as always, with the NASDAQ. And just first and foremost, intermediate term trend clearly up. A lot of daylight between its lower, which is now the 50-day moving average, trending nicely higher, but a lot of daylight here. Now, again, as I always say, if it fell like this tomorrow, it would still be technically positive, but that would be abnormal action, So what I would just say is if the NASDAQ, wanted to pull into here, it certainly wouldn't be abnormal or out of character following the run. It's also not abnormal just giving that I'm not a big support, resistance guy in the indexes, but there is overhead supply in here from the December, January, and February sort of trading range. So some sort of pullback here, whether it's because of the Middle East or trade or interest rates or whatever you're worried, earnings, wouldn't be abnormal. So far, still in an uptrend. Everything else is in the same boat. The big cap index is obviously the strongest. This is the S&P 500. Okay, New York Composite, same sort of thing. So these are all very strong. New York Composite came pretty close to a new high yesterday, actually, or earlier this week. The mid caps and the small caps are lagging a little bit. You can see down here, but even on an intermediate term basis, again, there's still not a ton, but a decent amount of daylight here above the 50-day lines, which even aren't quite advancing yet, but should in the days ahead if the indexes don't melt down. Okay. So overall positive. Another thing I just wanted to mention, this was straight from Ryan Detrick from Carson Group, so I'll give him full credit. But on June 9th, whatever that was, this week, somewhere in here, over the prior 2 months, the S&P had gained 20%. See, to me, that's like a nice, simple study. It's not like, every other Thursday the market did this. It's very simple, it's straightforward. There was a lot of power in the market over 2 months, which is amazingly super rare in the past 75 years or something like that. Only at major bottoms like 70, I don't have them in front of me, but it's like 1974, 1982, 2009, 2020. I think 1998 was in there, and this year. And it portends, all these instances went on to like 20, 30% gains a year later. It's just another study. I'm not saying, therefore, you're going to go, get fully invested right now on today's dip. But it's just another sign that, we have seen some unusual strength during this run by a variety of measures. And it should portend good things when looking out down the road, especially many months down the road. The next few weeks, who knows? News driven could happen, trade negotiations, Middle East. But over time, it should lead to good things, okay? Just poking around, back to what I was saying about growth stocks. One thing I mentioned in this week's Growth Investor, Cabot Growth Investor, if you go back and look, and actually maybe we will do this real quick, like this was the 2020 low, and this is the IBD 50 index, which is just a collection of like high relative strength, good earnings growth stocks. I'm not saying we own all these stocks or they're all liquid enough for me, but I'm just saying it's kind of the pond we fish in, so it's a decent representation. Nothing's perfect. Okay, this was the IBD 50. This was the COVID crash. And this was like the next couple months of recovery. And you can see it's a nice, 60-degree angle or whatever on the way up. Nice angle of attack higher, okay? If you look at the takeoff for growth stocks in November of 2023, okay, it kind of had a major bottom in 2022, spent basically a year bottoming out. And you can kind of see what happened. This was over 3 or 4 months, but you can see what happened over the next few months here. Very nice, attack, easily hitting new highs. When you kind of come to the current situation, okay, here's your kind of topping phase. This was your tariff panic. And now it's coming up. There's nothing wrong with it. Intermediate term trend is up, but it's not super powerful. And I think it's just another sign of what we're seeing, which is like, it's good. There's things that are working. There's some stuff that looks good, but for every one stock that's working, there's one that kind of breaks out and then stalls out or something like that. So it's just, it's not 2024, it's not 1999 right now. So I wouldn't be investing like that, at least as a growth investor. There's some other areas too, okay, but that look pretty good. But just on the growth side of things, that is something we're seeing, okay. The other, just going through some of this, top-down stuff. XLP, still not seeing any rush into defensive stocks. Even today, I was wondering, I was like, okay, we've pulled back in some of these leaders. Now we have bad news, so to speak, and uncertainty. Are we going to get a rush higher in some of these consumer staples? And they're just sitting there. Now, maybe that changes next week. You can always say that. And I mean, I guess they're outperforming a little bit. You can see the RP lines ticking higher today, but the last couple of days. But overall, just kind of sitting there. Same thing. This is POWA, a different fund, very thinly traded, by the way. I'm not recommending this at all, but they own very steady companies with like steady history of earnings growth. So not consumer staples, but a little bit more of a defensive flair. And it looks good, but I'm just saying relative to the market, you can see it's been underperforming here and no big rush into that. So that's all positive. And then last but not least is interest rates. This is a 10-year note. I don't see anything really to read into it. I know a couple weeks ago we talked about the 30-year note, the 30-year note yield, or the 30-year bond yield, I guess, over 5%. Well, that's come back in a little bit. It's about 4.90 here. So that's still kind of trending higher, but the rest of the curve is basically flat. I mean, you're just kind of going sideways here. The 5-year note, is actually probably trending down, so interest rates don't really they're not a headwind for the market is what I'm trying to say. So overall, like I said, the intermediate term evidence, growth versus defense, broad market trends, and most individual stocks, almost all of them that I follow, even if the ones that have pulled back, still positive. So that's what I'm looking at. If that changes and things really unravel next week, I'll change. But right now, I think obviously you have to give the market the benefit of the doubt, especially in the intermediate term. If you're looking for new buying, say you have a lot of cash, you didn't do much buying, you haven't been a believer, I do think it's probably worth, it really depends how you're positioned. If you're on margin, you probably own some things you bought lately. Maybe you want to keep some tight stops in, stuff like that. If you're, 75% in cash, yeah, maybe you're using this opportunity to nibble, keep some stops in, okay? So like here's a Duolingo. It tried to, recently some of these stocks tried to either quote unquote break out of these little range. You can see it had this little tight range, which was nice. But usually these things work better when you shake out quickly, and then that really shakes out the weak hand. So now we're shaking out the weak hand, so to speak. There has been some volume, but I mean, big picture, the stock, you can see on the weekly chart, whatever, 300 to 5 something, and it doesn't look bad at all as the 10-week line catches up. So to me, something like this would be, worth a shot. You got to keep a stop wherever you want. It's a volatile name, Duolingo is, but these sort of pullbacks, if you want to start a position and then it gets going, or maybe you wait to see if it can get going first, see if it can reclaim, say, 500 and then buy it. Whatever your strategy is, the stock looks pretty good. Seems to be pulling back normally. Rubric, we'll see. We do have a small position in this, and it had this. It would be unusual, not unprecedented, to be clear, for a stock that's kind of new, big numbers, leading industry group, leading price action, or one of the leaders in the cybersecurity group, persistent advance, to just up and die, unless the market ups. And if the market up and dies, then all bets are off. But so it sold off a little bit after earnings. Then it had a big convertible offering and just kind of came down to this 25-day line. I think it's just setting up. I mean, if this thing comes back down to 80 and gives up its entire, breakout, I think that would be not a great sign. But some of these things so far, it's a shakeout. It has some proving to do. You'd like to see it, the higher it can rebound, the better. But so far, that's certainly a name that we're still holding on to. I'm not going to give advice. That's for paid subscribers. But it's certainly a name that could be sort of a normal sort of trend knockout type move, as we call it, okay? Cloudflare, same sort of thing. This is one of these tricky, you see a lot of these tricky animals in this environment where they went from literally, basically 100 to 50. They basically got cut in half and then came all the way back. But Cloudflare did seem to change character after earnings. You just see it kind of straight up, huge volume, absolutely zero pullback. And then it finally kind of had a wobble yesterday. Today, so far, as I record this, it's finding support. 25-day line. Is a one-day correction enough? I don't know, but this is just one I'm keeping an eye on. Does it pull back a little bit more, bounce, pull back? All of a sudden, a couple weeks, you got a pretty high odds setup. It's certainly acting like a leader, and it's kind of a looser play on kind of the core weave type action, that sort of thing. Okay. CRDO, again, this is one that basically more than got cut in half during the decline. Was a super hot stock, has come back. It's been wild since earnings. This was the earnings move about a week and a half ago. So there was a reversal up and then came down, now up. Big picture, this looks like kind of a new little shelf in here. Call it a handle, whatever you want. To me, it could use some time, but I do think it looks pretty good. The numbers are huge and crushing estimates. So we'll see how it goes. But overall, I am intrigued with this because there seem to be some of the AI infrastructure stocks are way down and still circling the drain, but there have been some that have come back, and it looks like CRDO could be part of that winning group. GE Vernova, not much of a pullback yet. This was one that kind of looked like it was maybe going to do what Cloudflare did, where you have this persistent advance, and it kind of you can see how it kind of weakened just a little bit before the market did, and then it got hit on whatever that was, Tuesday. So I was thinking, maybe it pulls back in here, but so far it's bounced, it's holding up here. It certainly looks proper. It looks like it's under control by the institutions. Doesn't mean it can't go lower, of course, but so far so good on Vernova. Garden Health. So this is interesting. I have seen, so some of the buying recently was off the bottom stuff. So you saw like, this is ASML. I'm just bringing this up. I'm going on a tangent. You get what you pay for with these videos. But so ASML is like the chip firm with the EUV, great company, very profitable, but had some hiccups here in the last couple of years. Anyway, it's just been lagging, hasn't really gotten going yet, but these are the ones that kind of started to ramp recently that kind of helped the major indexes. That's why nothing's hitting new highs. That's all this stuff, not nothing, but very few stuff is hitting new highs. We started to see some of that come back in some of the medical stuff too, okay? But Garden Health has been better than most in the sense that it got some more positive news from the FDA. I'm not going to say it all here, or the regulators basically for its newer tests. And you just basically have this failed breakout here. It looked like it was ready to get going, obviously corrected. And now it's really stormed back on good volume and it's holding up well. To me, a breakout would be interesting. Medical stocks still don't have the biggest, faith in them. There's the regulatory side of things. And they've just been a little bit out of favor, but I do like the pattern here. So we'll see how it goes. GH is one to watch. Amer Sports had this huge, again, didn't get cut in half, but 34 to 20 back to 38, okay? And it just kind of rushed higher with a huge gap. And big picture, it tried to get going a couple days ago, failed. Now it's pulling back. And, on a day-to-day basis, it's like, ooh, it's down 2.5%. But you look at this, and it's very much under control. You can see volume's been below average here for a bunch of days in a row. The weekly chart, the stock is basically just chilling out here. It could come in lower, obviously, with the market, but this one is on my watch list and still looks good. Just mentioning CCJ, some of the nuclear stocks look good. This one, we just missed this in top 10, which kind of makes me upset. But we had our buy range down a little bit and just missed it. But really, really strong. This was big volume here on the buy side, and then it had even stronger volume on the industry group. Got another lift here earlier this week, and it just remains nice and tight. Not sure what you do with it here, but clearly out to new highs. You can see on the weekly chart, kind of out to new highs above this sort of, year-long or whatever that was, resistance area, and the volume this week looks like it's going to be one of the biggest in at least a couple of years. So looks pretty good, CCJ. Just a couple more that were not off the bottom, but interesting. So this is Wingstop. This one is off the bottom, but you can see that's a different cat than something like an ASML, right? Back above the 200-day line, really a big, I don't want to keep saying angle of attack, but that sort of thing, coming real nicely higher. There is some selling this week, but again, and there is some old overhead in theory, but again, this kind of has the look of sort of a knockout move. I sort of like to see these. I guess if you own it, you don't want to see it, but when you see a stock that's pretty persistent, pretty powerful, above all its moving averages and very extended, and then it gets whacked a few percent over 2 or 3 days. I'm not saying you have to buy it there, but my guess is if all's well, it probably, holds up here, certainly above the 25-day line. So just one to watch. And then last but not least is Seagate Technology. I'm not sure if I mentioned this a couple of weeks ago, but this it's an old stodgy industry group, but the cycle is turned up for the group, which is good. And there's a whole new technology that Seagate is pioneering. Everyone's working on it, but they seem to be in the lead. And, just unusual strength. It's 1 to whatever. I'm going to say 8 weeks up in a row. Count that out on your own time. But so far, it looks like 8 weeks up in a row. You can see the relative performance line just kind of straight up, week after week here of many weeks of big volume buying. And it has pulled back a little bit here. Again, maybe you get a little bit more market weakness. 25-day line catches up or something like that. But just one that it is on my watch list. I'm not usually a big player in like hard disk drives. I look for something a little bit newer than that, but it does seem to be like a unique time in the industry and technology-wise. So you can see there's been some weakness, there's been some pullbacks, and there's some things that I didn't mention that are a little worse than that, but almost everything that's pulled back was stuff that had a big run. So it was more profit-taking, and they've pulled back to like the 25-day line, which is totally normal at this point. So we'll see how it goes. Same thing with the market. Even the weakest indexes like the small caps, which are down here, they're quote-unquote only pulling back here. They're touching the 25-day, this green line so far. So it's totally normal to this point. Let's see how it goes. Obviously, the weekend's coming up. Something could happen overseas that could, drive the market and some of these stocks lower. So you want to have your risk, your stops in place and all that sort of thing. But if you have, if you bought something recently, or you bought a lottery ticket, or you bought something that's sticking straight up in the air, you know what I'm talking about. Keep your stops in place. Make sure any sort of bad situation doesn't get a lot worse. That's just in case the market does really come in. But overall, especially if you have a regular size position, have a decent profit cushion, let's just see how this plays out. I wouldn't overreact to the news. I wouldn't underreact to it, but I wouldn't overreact to the news. Just follow the charts, which so far look healthy on an intermediate term basis. Okay, that's all the time I have for today. I hope you have a great weekend, a great Father's Day weekend, and we'll be back again next week with another Cabot Weekly Review.